2 years, the price has gone from 100 to 121 for those Jordans, right? That's inflation. The next year it'll go up by another 10%. The next year it'll go up by 10%. That's what inflation is. This is a price shock. And that's different. What do I mean? So if that Jordan has a 10% tariff on it, it goes from 100 to 110 one time. And if inflation is otherwise zero or close to zero, it doesn't go up the next year by another $10 and then another $10 and another $10. That's not how tariffs work. It is how inflation works. Before Liberation Day, the smart money line was at like 250 billion. Okay. That's Wall Street. I mean, we'll put smart in quotes, but that was their number. And part of why the stock market went berserk was they just got it totally wrong. And the back of the envelope math that I did and that a couple of my friends did, and I would say they're much smarter than I am, they got to 750. I got to 750 as well. Howard Lutnick, who's a commerce secretary, said like anywhere approaching 750, we have a line of sight to be able to cut income taxes to zero for anybody making 150 or less. I mean, so we're in the magic zone here, guys. So here's what I mean?
The Bitcoin market has been caught in a whirlwind of volatility, but one number might finally bring the chaos to an end: 750 billion. According to billionaire investor Chamath Palihapitiya, this isn't just another milestone, it's a transformational threshold. For years, Wall Street fixated on a much smaller target, $250 billion. That miscalculation not only fueled confusion, but also amplified instability across global crypto markets. Now, with fresh insights emerging, Palihapitiya's analysis reframes the narrative. He argues that $750 billion is the real tipping point, a level that doesn't just stabilize Bitcoin, but could revolutionize U.S. economic policy. We're talking about real possibilities, eliminating income tax for millions, boosting investor confidence, and resetting outdated financial models. This figure has the power to anchor volatile markets, encourage institutional adoption, and pave the way for a more predictable, prosperous digital economy. In short, it's not just a number. It could be the key to unlocking long-term crypto stability. In today's video, we dive into exclusive clips from Chamath Palihapitiya's interview, where he explains why 750 billion is the number that could change everything. Tap like if you're ready for a more stable crypto future. Drop your thoughts in the comments. We're reading them all. Don't forget to subscribe and turn on the bell so you never miss a deep dive like this. Thanks for being here. Now, let's get into it.
So here's the thing. America owes people a lot of money, okay? We owe, oh my gosh, I want to say maybe $35 trillion to other people. Now, it's important to understand who are those other people and why did that happen?
Yeah.
So let's just say the five of us are running America. We all go off into our own separate rooms and, we come back with a plan. And Andrew, you're like, I want to spend $1 billion on defense. And then, Mark says, I want to spend $1 billion on healthcare. And I say, I want to spend, $2 billion on Social Security or whatever. And we tally it all up, right? And we're like, okay, to run America is going to cost $10 billion. How are we going to get that money? The answer is we're going to go to all the individuals in the United States to pay for it. By the way, just so you guys know, before 1913, okay, we had 120 odd years where all of that money, that $10 billion, whatever that number was at the time, it was all generated via tariffs. Okay, it was outside folks paying in to have the right to be in the United States. Then we would take that money and we would pay for healthcare, we would pay for Social Security, we would pay for military, we did all that stuff. Okay, so anyways, fine. So here we are. But you add up all the amount of taxes we raise, and it only is $8 billion. So what do? You go and you borrow from somebody who's willing to lend you $2 billion, right? So
just to clarify, like that borrowing doesn't necessarily mean a bank. People can buy bonds. They can buy these treasury bonds. And isn't that a similar thing?
So what happens is, okay, we're like, okay, shit, we need to come up with $2 billion. Where do we get it? So what happens is the United States Treasury is allowed by law to then go into the market. Okay. I'll explain what that means in a second. And sell an IOU. Mm-hmm. Hey, this IOU is backed by the United States government. Full faith and fidelity of all of the assets that we own. Give me $2 billion. I'm going to take it. I'm going to fund this deficit, and I'm going to spend my $10 billion this year. We've been doing that basically forever. Add it all up now, we're at 30 some odd trillion dollars. Okay. Now, what is the problem with that? Well, that is a colossal interest rate payment. Imagine that you take out now a credit card every year, max it out. At some point, you're going to have an enormous interest payment, right? And that is dictated by the interest rate that is tied to the credit card that you have. It's the exact same thing for the United States government. We have 30 some odd trillion of debt, and we have a really high APR.
Yeah, the APR is what right now?
Well, I think the blended is, I want to say like 5-6%, let's say. So, you're talking trillions of dollars in interest, okay? Which is a problem. So on top of that, these credit cards, assuming you have this credit card, it expires and you got to go and apply for a new one. Mm-hmm. That's what every year. So right now in this year, America has $6 trillion of credit that is expiring that we don't have the money to pay for. So what do we need to do? We need to reborrow that money.
So issue more bonds.
So we have to sell bonds. So who are the buyers? The buyers are all these people around the world, central banks, pension plans.
Also us.
Yeah.
So yes, but asterisks. The thing that America, again, I go back to, we are the star of the show. Okay. Everybody is levered to the United States. Everybody. What does that mean? If you go to Japan is way deeper in debt than we are. They have 2 times as much debt as we do relative to our GDP, relative to the amount of revenue that we make. And you would say, well, how's that possible? When Japan finances their debt, the overwhelming majority of the people that are supporting Japan are the Japanese companies, Japanese pension funds, Japanese individuals, your mom, your dad, buying the Japanese bonds. In America, it's not that. It's about 1/3 are Americans, but 2/3 are everywhere. Okay, it's like the Saudi Aramco, it's Shell, it's Novartis, it's the
China.
Central Bank of Lesotho, it's China. China owns almost $1 trillion of our debt. So the whole point is, if you can bring the cost of borrowing down, we save ourselves a lot of money. We make the headache much smaller. Now, here's a huge problem that happened at the end of Biden.
Based revenue in 1913, America has become addicted to debt financing, and now our obligations total over 2/3 of GDP. With interest rates hovering between 5% and 6%, annual debt payments are putting serious pressure on fiscal policy. But here's what makes it even more dangerous. Unlike Japan, which holds most of its debt domestically, the U.S. relies on foreign creditors, including China and multinational corporations. This year alone, $6 trillion in U.S. debt will mature, and if policymakers don't act soon, market forces could take control, with consequences no one can afford. This is more than numbers on a spreadsheet. It's a question of economic survival. While the Biden administration's short-term moves helped delay the inevitable, they've now created a $6 trillion reckoning. Ironically, former President Trump's use of tariffs actually reduced interest rates, saving the country billions. The contrast highlights a much deeper divide. Half of Americans own zero stocks, while the top 10% benefit from unchecked Wall Street growth. Tariffs cause a one-time shock, but inflation causes ongoing pain that hits working families the hardest. And here's the kicker. Reintroducing strategic tariffs could generate $750 billion, enough to eliminate federal income taxes for households making under $150,000. This isn't just economic theory. This is about real solutions for real people. In this video, we break down how bold economic reform could change everything for working Americans, and why time is running out. Let's dive in. The stakes couldn't be higher.
The thing with Biden, just so you guys know, is, this is a misnomer that, Trump is, for the wealthy. I don't think that that's true. Trump is much more about MAGA, which is like working class, middle class. He's not about the Mag 7. That's what Besson said too. The stock market is a Mag 7, Magnificent 7 problem, not a MAGA problem. What does he mean by that? Yeah. What he means is like 50% of Americans have zero equity exposure, zero. And so, and 44% of it own like 12%. So for the most part, the American individual investor is not necessarily super exposed to equities. And so the thing that Biden did, though, is he had an incredibly aggressive program of keeping the stock market afloat. How do you do that? Okay, so like if you guys and I wanted to manipulate the stock market at the president of the United States, what could we do?
Keep money cheap.
You would keep money cheap. You would,
which means, just for everybody, like making sure the cost of taking out money, like interest rates are low.
Yeah, they were high, but what Janet Yellen did was, as the interest rates came due in that period, they massively just refinanced the debt. And this is getting a little technical, but in very short periods of time. So when you go and refinance yourself, right? Like if you go and refinance your home, you could do a 10-year mortgage, you could do a 30-year mortgage. She did a 30-day to 1-year mortgage. Okay. Now, why would you do that? If it was cheaper, right? And you basically had more flexibility to just keep money in the system. If you had, all these $2 billion loans going out to all of your friends who would just like spend in all kinds of crazy ways, everything looks like it's working. GDP looks like it's working. The stock market goes up because the earnings of these companies looks like it's working. And what's incredible is that problem is now coming home to roost now. So Besson has to refinance $6 trillion in the next 9 months.
Oof.
Okay, so this is like not a small number, right? So all this debt that basically Yellen and Biden just kind of put on the front end, it's called the front end of the curve, like these 1-year maturities or whatever, they got to figure out how to push it out 10 years, 12 years, as far as possible. And so that's going to be a very complicated task. And so they benefit from the lower interest rate. And to your point, what tariffs did was it shocked the stock market. And when that happened, it told the bond market, hey, man, there's a lot of volatility and uncertainty here. It's like, let's go to the sidelines for a little bit and just chill and observe what happens. When that happens, the interest rates go down. And that allows us, Americans, all of us collectively, we will save hundreds and hundreds of billions of dollars because of what has happened in the last 5 days. What is inflation? Okay, inflation means, if you said inflation is, I'll pick a number, 3%. What does that mean? That means that if you and I bought those Jordans and they were $100, next year, let's just use that for the purposes of this math, are 103, right? They go up by 3%. Actually, let's use 10% because I'm bad at 3% math here. So it's $100, it goes to 110, okay? The next year, it goes up by another 10% if inflation stays where it is, right? Now you added $11, right? So now the shoes are 121. So in 2 years, the price has gone from 100 to 121 for those Jordans, right? That's inflation. The next year, it'll go up by another 10%. The next year, it'll go up by 10%. That's what inflation is. This is a price shock. And that's different. What do I mean? So if that Jordan has a 10% tariff on it, it goes from 100 to 110 one time. And if inflation is otherwise zero or close to zero, it doesn't go up the next year by another $10 and then another $10 and another $10. That's not how tariffs work. It is how inflation works. So I think it's important to just make sure, like, are tariffs inflationary? They can be, but not necessarily. The reason inflation happens is, the price of oil goes up, so it's more expensive to run the factory. So then the goods become, nothing changed to make your shoe. Nothing. It's just that when it landed in the port of LA, there used to be a piece of paper that you would stamp that said 0%. Now the thing is stamped and it says 10%. The actual cost of making this thing has not gone up. What they said is there's going to be these price shocks. You're right. So year one is difficult, okay? But it could raise upwards of $750 billion a year, okay?
You're saying tariffs.
Tariffs. What they said that they would do is they would then turn around and cut the federal
income tax
for anybody making $150,000 or less to zero.
Markets just got a surprise boost. U.S. inflation came in lower than expected, with March CPI at 2.4% versus the 2.6% forecast, and crypto reacted fast. Bitcoin and Ethereum both surged, fueled by optimism and a temporary easing of trade tensions. President Trump's 90-day delay on some tariff hikes added to the momentum, but not without a twist. His administration kept aggressive 125% tariffs on Chinese imports, creating a mixed signal for investors and adding more volatility to the picture. This dual reality, cooling inflation paired with intensifying trade friction, is creating a complex new backdrop for digital assets. With America's structural debt issues and tariff strategy in flux, traditional investment models are being rewritten. We're watching macro policy reshape the crypto thesis in real time. In a major move, the SEC just approved Ethereum ETF options, mirroring Bitcoin's earlier ETF breakthrough, another strong signal of institutional adoption, even as regulatory scrutiny remains high across the rest of the crypto space. Bitcoin briefly touched $82,700, but some analysts warn this could be a bull trap, especially with U.S.-China tensions heating back up. Yet compared to traditional markets, Bitcoin continues to show relative strength and resilience, reinforcing its role as both a risk asset and an emerging macro hedge. With gold-backed crypto tokens outperforming and treasury yields swinging, investors are now balancing between inflation pressure and geopolitical uncertainty, and crypto is right at the center of this global financial recalibration. Do you think eliminating income taxes for households earning under $150,000 is a realistic solution, or just political noise? Drop your thoughts in the comments. We want to hear from you. Like this video if you believe crypto is reshaping the future of finance. Share it with a friend who needs to understand what's really happening behind the charts. And make sure you subscribe and hit the bell for more deep dive breakdowns just like this. Thanks for watching.